Welcome, everybody. Good evening. Wednesday, May 11th, 2022, market update video. So just continuing some volatile action in the markets with Bitcoin breaking below the $30,000 resistance level. Luna going so far as to break below $1. Seeing people throwing gambling money at it, seeing what happens. Of course, not necessarily something I advocate for, and certainly not financial advice. USDT even showing a bit of weakness in the aftermath of the UST sort of debacle, and just some off the cuff thoughts on what I've learned about what independent thinking really means, and a journey that I really uh, uh, started to embark on, recently, and is sort of a daily struggle to realize. So let's get right into it. So Bitcoin today breaking below the $30,000 level, really something that we've been expecting here, based on the technicals. And so, we have our measured move from this sort of channel here that's been um, forming for the past, over a year or so. And, um, you know, um, we have, a sense of our downside risk on the basis of the measured move, as well as the 200-week moving average, and the previous all-time high from um, 2017. So, um, personally, and again, not financial advice, but um, I think with fear at a very high level in the market, um, we're starting to see some relatively more attractive risk to reward ratios. Um, just keeping in mind, however, that um, the technical uh, target, if you will, for the potential downside risk is still a ways off, and so if one imagines that they have a pool of capital on standby, whether it be cash or stable coins, um, they might think about how best to manage those in terms of potential tranches to sort of scale in, as the price, um, you know, uh, gets closer to, if and when the price gets closer to that sort of technical target to the downside. People use Fibonacci levels, moving averages, trend lines to sort of calculate how much they're going to buy at a certain level. Personally, I sort of just look at how much capital I have and how much I might like to save coming up, and just sort of make sure I'm not overdoing it or underdoing it. So however you want to think about that, but you know just keeping in mind that the volatility in these markets can be absolutely extreme, and that we have to be on our toes and look for clues that things may not be going our way, kind of like with the Luna example. Uh, so this is still playing out, and so we're gonna obviously give that time to show us where it wants to go. Same thing with Ethereum through here. You know, uh, Kind of a bearish look to this price pattern that's been developing, and with a similar sort of downside move target into the low thousands, possibly even to that 200-week moving average. So again, similar sort of principle here with Ethereum. Just keeping in mind that Ethereum generally magnifies the moves that are made by Bitcoin, either to the up or the downside. But we'll see kind of how this goes. And same thing here for the ETH to Bitcoin ratio. Kind of really no change to this chart here. Still kind of testing this 50-week moving average and coiling into this range. So let's see which way this breaks, if at all, or if it just sort of continues sideways from here. So Terra Luna, we'll take a look at really the 1-hour price chart here, just to get some kind of a sense of are there any short-term clues as far as where this might like to head, and unless this sort of double bottoms here, it looks like it wants to continue rolling over into the sort of penny stock range. We have here the Bollinger Band just literally falling off the map, and the EMA 8, the 8-period exponential moving average on the 1-hour time frame, really serving as that resistance and rejection level. So really, for any sign of a recovery, it would need to at least overcome that. Much less get back above the 20 period on the 1-hour, so that it could get back up to this sort of $5 level, which was our measured move target from the ascending wedge from yesterday. So I know people have been saying they've been throwing in gambling money at this, which it's just sort of funny. It's almost become like a joke. Personally, I haven't gotten back into this, but for curiosity's sake, because oftentimes the charts will give subtle clues as far as where things might like to go. In this case, we're looking at sort of the hyper short term. But just like kind of when UST over the weekend subtly broke below the trend line on the 1-hour chart and formed a bear flag, if you were really, really paying attention to that, you might have avoided sort of the depeg thing with that. So, but for now, kind of watching and waiting this one on this one. So Do Kwon posted a thread. I guess this was the thread that he asked us to hold on for, and so he tries to give a little bit of background and sort of paints the picture that the UST is at 50 cents and that there's too much supply and not enough demand, and they are backing a proposal to increase some base pool minting capacity, and that they're actively discussing additional ideas, and that this should continue to improve, and they're continuing to explore various options to bring in more exogenous capital. This I found interesting. So basically asking VCs, lending platforms, let's say someone like a Celsius, to provide exogenous capital, and thereby those institutional players and sources of capital will basically control more of the supply in that scenario. And you have to wonder, who are these exogenous sources, right? I mean, are some of these same exogenous capital sources potentially some of the same actors that shorted the coin in the first place? I mean, that's pure speculation, but you kind of have to wonder about that. And if at the very least it would fundamentally change the idea and the philosophy of Terra Luna as sort of that collateral algorithmic stablecoin to more of a collateralized one. So here he sort of says that as we begin to rebuild UST, that its mechanism would be more collateralized, and so that there's a long-term vision and a short-term setback, and they're going to rebuild. So Richard Hart trolling here. So I'm just seeing from this that they basically have to rebuild this project from scratch. It's not going to be a quick fix on this. And again, kind of pure speculation, but my gut sort of tells me on this that the peg may reclaim sooner than this may lead you to think, but by that point, the market may have already recovered, at least to the point where it becomes less of a relatively favorable risk to reward ratio in terms of an entry point to sort of deploy those UST stables. And that's the whole point of a stablecoin, is to be able to deploy them when you want to and sort of park them in a safe place. And so the UST chart, I think so. On the daily, we're seeing the price sort of test and get rejected by the EMA 8 on the daily time frame. So we would need to see that become overcome, that resistance become overcome to really start reclaiming the peg. So we're forced into sort of the shorter term time frames here on the 4-hour. And let's see, so it looks like we got down to as low as 25 cents, which is just really terrifying for anyone with a considerable UST position. And so right now what I'm seeing on the 4-hour is actually that on the 4-hour time frame we did reclaim the EMA 8, which is good. It's a good sign, and now we're sort of testing this middle of the Bollinger Band, a 20-period moving average. So it's sort of digesting here, the price in between those. And so, for the bulls basically want to see it consolidate here a bit and then overcome the 20-period on the 4-hour to start making a move up back to the reclaim the peg. The bears would see this level as a level of resistance to basically exit their positions and live to fight another day. So that's basically what I'm seeing here. So that 20-period moving average is about the 80-cent level. So that's a level I would be keeping an eye on. And just having fun with the 1-hour. I think here the moving averages are a little less helpful, but we are seeing this sort of trend line, which started really over the weekend in that sort of very subtle break below the peg, and has really been respected here. And the 1-hour shows it nicely, and basically just sort of a textbook rejection right off of that line. So here at 83 cents. So on the 1-hour time frame, I would like to see it reclaim this trend line. So yeah, so far on this, if this candle can close net positive, that would be good. So on the 1-hour. So I think in a situation like this, we have really no choice but to go to shorter term time frames. And folks who kind of say, well, you can't chart that. Okay, fine. But for me, the charts have been very, very helpful, and I wanted to sort of use this as a way to talk about a topic that's of interest to mine, which is sort of how do we form our perceptions, and how do those perceptions shape our behavior. And the main thing that I've learned is to sort of really resist the temptation to outsource your independent thought, because another way of saying that is to outsource the formation of your perceptions. And what that's really doing is sort of relegating responsibility. So what do I mean by this? So Twitter, YouTube, Telegram, influencers, right? Social media, the TV, CNBC, right? All these information sources are really like programming. Literally, they call it programming on TV, but it's also like programming your mind. And we have to be aware of that and resist that. we consider the information that's provided, but then also consider who's behind that information, what are the motivations behind it, because humans act in self-interest, right? So, with the exception of maybe your immediate family, to whom you have or they have responsibility for or for you. Um, other than that, or if you're in a contractual obligation, which dictates the nature of a relationship, humans really act in self-interest. So, a billionaire or a millionaire who is telling you to do something, or an influencer who has a vested interest in having the market go a certain way, certainly, uh, um, I think, uh, ought not to be copy-pasted for the sake of, well, they've been successful, so I should do what they say. I think that's really dangerous, and quite honestly, I think that's uh, a reason why so many influencers have become so successful is because um, people, it's much easier to outsource your thinking, um, in this manner. And not only do we act in self-interest, but we also don't like to admit when we're wrong. And um, so if we kind of realize on at least a subconscious level that we were wrong about our thesis on something, or our the reason we got into something, and it goes against us, we on one level see that it's gone against us, but on another level we sort of refuse to admit that we were wrong and to change course. We become ego invested in that idea, and so this is where I think you see people saying they have diamond hands, they don't care, they're holding it down to zero, and that sort of thing. And I think that for your portfolio's sake, um, and hey, if you have a position size that's just so small that it's like you don't even lose a minute of sleep, that's one thing, right? But if you have a significant position in something to the point where it affects your ability to maneuver in real life and to pay your obligations and debts, that's a problem, right? So because of this, um, uh, for me, we really have no choice, right, but to rely on the charts. So why I sold my UST, like I sort of mentioned in a previous video, I had a considerable UST position, and you know, based on sort of the chart, the technicals that I've been discussing over the past couple of videos, um, sort of realized that my investing thesis became invalidated. I was, in a sense, I was wrong, right? I was wrong about UST as being a relatively safe source of stable income, right? It turned out that UST was and is actually a highly, highly risky asset to hold, right? The moniker stablecoin was obviously disproven for this, right? To the point where they're now having to rebuild the whole project out, right? It's something basically Do Kwon is saying. So, and the other reason was, well, yay, you hold your UST on Anchor, and you in case you want to deploy it when the market goes down, right? When BTC hits 20K or 19K and you want to ape in, right? And buy big. Not financial advice, but so when the thing depegs, right, and goes down to 25 cents on the dollar, the last thing you want to be doing is saying, well, don't worry, Do Kwon's a smart guy, right? This is going to be, don't worry, it's going to just take like 2 weeks, right? I mean, we've heard that before, right? Right? And then you become so dependent on what one man is going to say and do, and it's not fair to your portfolio, right? In my opinion, and this is, again, not financial advice. This is the way I sort of thought this decision through. Then you had the technicals, right? We saw the trend line. We saw the lower lows and the lower highs. We saw the EMA 8 resistance, uh, right, on the daily, and we're seeing the other resistances here. So uh, that, and then the statements from Do Kwon, right? We will uh, we'll announce a plan for the recovery process, right? Um, this is a long-term vision. This is a short-term setback, right? So he's telegraphing this is not going to be a quick fix, right? Um, and then, of course, one can't help. There's a lot of theories out there as far as who's behind it and things, but at the end of the day, it doesn't really matter, in my opinion, the specifics of that, other than to say that whoever may be, coordinating, if it is coordinated, um, it would make sense to me if you just had a big pool of capital that wasn't accessible to people at a very opportune time in the market. Potentially very opportune risk reward levels for sort of that pristine collateral of BTC. For example, right, or stocks even, right? Traditional stocks or other assets. You know, Liquidity is scarce right now. And people realize that, and they're profiting off of that. So the timing of that. So all of these things, right? So technicals are one piece of it. I think it's the tiebreaker, right? But all of these things, and um, the weight of the evidence, right? So you consider the fundamental aspects, the statements from the founder, maybe a little bit of speculation, but just sort of your gut feeling, the technicals, and your thesis was invalidated. That's what that's what got me to sell, right? That's what got me to sell at around 83.5 cents on the dollar. So, uh, it's not an easy decision, because if it continues to go down, you look like a genius. But then if this turns out to be a reverse head and shoulders formation in the making, and it snaps back right up to peg within 2 weeks, then I look like an idiot, right? But but you have to manage your portfolio and you have to manage your risk. So um, hopefully that was shed a little bit of light on sort of a topic that's of great interest to me, which is sort of how to form your own thesis in investing. Just of interest here, USDT or Tether. Also seeing a bit of a sell-off here to the 0.9958. Obviously, nothing like what we saw with, at least so far with UST. And in fairness, if you go back, it looks like there have been some pretty volatile. This is Binance. I'm not sure really what the source of all of this volatility came from, but so we've seen bigger swings so far, but something to keep an eye on. Some decent volume here to the downside, and so I think we are going to see people, at least for the short term, really flock to things like USDC, USD coin, and even just straight up US dollars. It'll be interesting to sort of follow this. So that's all I had for today. If you made it this far, thanks for sticking in through it, and consider giving it a like and subscribe. And catch you in the next one. Take care.